What's going on, guys? It's not quite bright and early yet on Sunday, and we are closing out week 17 of investing on our channel, where we put $50 every Monday through Friday into dividend stocks. And we went off the rails this week. So let's take a look at the channel tracker, and we're going to look at some crazy trades because, as I said at the beginning of this week, it's a trading week, and we did that. All right, so first things first, we're going to take a look at our channel tracker. Today is the 30th of April, 2023. I didn't put any weight information in because we're doing an official weigh-in on Tuesday. I'm starting Factor 75, their keto meal program, and we are going to kind of supercharge that weight loss and get back to feeling good about it. So yeah, I didn't want to weigh myself now. I just want to go into it and say I lost 50 pounds in 2 months on Factor 75. Not a sponsored thing. I just did it. Maybe I'll get an affiliate link from them later or something. I don't know. But anywho, investment balance, guys. We broke 5,000 and we are continuing to push. We have $5,146 in our investment balance. This is an account that we started on January 1st. Okay, so this is a year in of investing. We're over $5,000, and we're not even halfway through the year yet. So really exciting growth. Dividends earned, we're still at $35.06. So over the next 2 weeks, we should have some big dividends getting paid out. That'll be exciting to see. But for now, $35.06. Total growth. Look at this swing. So we were down $200.60 on the 25th. What was that? Tuesday. So on Tuesday morning, we were down $200. And then this morning, we are up $195.67. So that is almost $400 of profit off trading from this week. So as I said, we're flying off the rails a little bit. We're going to kick it in a high gear, do a little options trading, and that is indeed what we did. So yeah, pretty cool to see. YouTube income, we're still at $100. That's from people signing up for Sofi investing. Guys, if you want to sign up for Sofi investing, there's a link down in the description where if you put in $10, you get $25 of free stocks if it's a new investing account. So not a wealth manager, credit counselor, or financial advisor. I'm just a guy in a triangle-shaped room. However, it's a pretty good place if you want like an easy platform to kind of start learning on. Total subscribers, we are at 1,760 subscribers. Total views, we are at 189,230 views on YouTube, so that's pretty cool. Creeping up on that 200K, which is awesome. Total watch hours, we're at 3,722 hours, 22.4 hours. So the reason why that matters is in the event we get to 4,000 hours, I finally get monetized on YouTube. So we're creeping up. We're getting close. Thank you guys for all the support. I love it. But without further ado, let's take a look at my Sofi trading history. And we're going to look at how did we crank basically a 10% return in 3 days. All right. So the day was April 24th, Monday, the beginning of this week. I wish I was that good at storytelling. But it all started here, guys. So the options price on JEPQ looked really cheap to me. One of the reasons why I like having a smaller portfolio with, in this portfolio, we have 9 things. Like between 8 to 15 things in a portfolio, the benefit is you look at such a limited amount of data that you kind of understand like where values are going. You only have to look at so much news and so much information. And so you kind of get a good feel for like what's going to happen to what. So for all the kids who did math in your head in high school, you'll know what I'm talking about if you take this approach. So you kind of get an idea of like what can do what. So I bought this option on JEPQ for $25. So what that means is I bought the option to buy 100 shares of JEPQ at $45 on May 19th. And the amount that I had to pay to reserve those stocks for that price at that time was $25. So when you buy an option like that, right, there's a couple things you can do with it. Primarily, option or path number one is you just wait it out. So you can wait it out, and then when you get to May 19th, in this case, right, I could spend $4,500 and get 100 shares of JetQ. Now, I don't have $4,500 in this account, so that's not my intention. However, what you also can do is if it's, let's say JetQ is trading at $46, okay? So you can take the profit between $45 and $46 times 100 shares. So in that case, $100. And you can basically just get all that money in your account. So that's kind of like the one path. You either exercise the option where you pay the money and get all those shares at a discounted price, or you can just take the profit out of that trade or that transaction. The other path is you can sell off your call option if it gains value. And that's what my intention is. So I typically, once I see like 100% return on my investment, that's a point where I would like to then sell that option. Because to me, if I can make 100% return on something, that's good enough. Maybe make 200, 300% return, which those are outrageous sounding numbers, but we're going to look at what happened and you'll be like, oh yeah, I guess, yeah, he did that. So here is what we did. So this first option, I bought one contract. You can see that right down here. It cost me $25. I bought it in the morning. I had 30 something bucks of just withdrawable cash that I had told you guys, maybe I'll buy some JetQ. I decided to buy a JetQ option instead. So that was the start of the chaos. Okay. So now we got to go to the next day. Hold on. All right. Now we're in the 24th. This shows all my orders, and I bought $5 and $10 of the different shares that we buy every day. And then something whimsical happened. Okay. The next day, you'll see this is $100 more, and you'll see this is $45 more. Okay. So at 10:50 a.m. the next day, so this was Tuesday, the price of those contracts went down to $15 per 100 shares, or 15 cents per share. So I bought 3 more contracts at 45. I still fully believed that this was the right play because I thought it was a deal at $25. So if I go buy 3 more contracts at $15 each, that sounds like a steal. So I did that. And then right after, the price went down to $10 per contract. I still thought $25 per contract was a good deal. So I said, hey, let's put some more money in. Let's buy 10 more contracts. We'll spend 100 more bucks. So at this point, I'm in for $170 total in call options on JetQ. So I guess to some degree, I did stray from the normal depositing schedule of this account. I was using additional money that I had funded the account with. So here you'll see a deposit for $102.75. And then another cash deposit here of $35.62. So this week we did put in an extra, I'm just going to say $170, even though it was $135, but we put in an extra $150 basically. So that is partially part of the reason why we have a little bit, but it's more that we just traded like champions. So now I have 14 contracts on JetQ. So basically, I have contracts in place representing 1,400 shares of JetQ at $45 a share, which is a lot of stock to be kind of like eligible to purchase or responsible for, or however you want to look at it. But we have 14 contracts of JetQ to buy them for $45 a piece. And our average cost on those at that point was $12 per contract. So because we bought so many contracts at $10 per contract, we owned all of our contracts for $12 each. So kind of like dollar cost averaging into the stocks, we talk about that a lot on this channel. We sort of dollar cost averaged into a pretty realistic option. So let's take a look at, and I set some sell orders, which I canceled because I was like, wait a minute, we're going to make some money here. Okay. So let's take a look at the chart of JEPQ. All right. So looking at Seeking Alpha, this is where I track all my stuff. This is the chart for JEPQ. So we bought all that, like the 10 shares roughly around here. So it was $12.47 when we bought the 10 more contracts for $10 each contract. And the price was $44.42. Now, keep in mind that the price here is like significantly down over the past couple days. And JEPQ is a pretty easy stock to understand, or funds to understand. They sell call options on like 5 stocks, and they hold like 5 stocks. I mean, actually, let's go to holdings real quick. This is what they have. I mean, it's Microsoft, Apple, you know, they really have like 5 stocks. Like, yes, they have more than that, don't get me wrong, but like 11% of the company is Microsoft. 10% is Apple. So like it's pretty easy to understand like the value of holding this fund. So and Microsoft was going up 9% at this time, right? Apple was up like 7. So when I'm looking at it and I go, okay, well, if 11% of JEPQ is Microsoft and Microsoft is up by 7%, then that means that we should be up 0.77%, assuming everything else is even. Like, I'm doing that and like looking at it. And meanwhile, the stock is like tanking, and I'm trying to figure out how is JEPQ tanking, and it didn't make any sense. So I was like, oh yeah, I'm buying the options. That's really why I looked at it, because I'm like, why is JEPQ tanking and all the main stocks that it holds are skyrocketing? It doesn't make any sense. And again, the benefit of trading only a few different funds. And I'm not a wealth manager, credit counselor, or financial advisor. I'm just a guy in a triangle-shaped room. I say that all the time, multiple times per video, but this was easy enough for me to look at and say, at least to me, this makes sense based on doing my own research. So I bought in, right? At the start of the next day, JEPQ stock was above where it was when I bought all those options. So right off the rip, we skyrocketed to the moon. And, you know, on the 26th, we sold off a couple of the options, 2 of them. We sold 2 contracts for $20 each, so a total of $40. And then we sold 1 contract off for $35, which is a massive gain. I mean, when you own it for 12 and you sell it for 25, that's 100% gain. When you own something for 12 and you sell it for 35, that's a 200% gain. So like massive gains there. But only a couple of the contracts sold off. I had some automated orders in. And then after hours trading happened. So during after hours trading on going into the 27th, right, I looked at it and I was like, you know what? I think, hold on, let's scroll this down so you can see it better. I was like, this thing's going to the moon, because a contract, there's what's called in the money contracts, at the money contracts, and out of the money contracts. So if a stock's worth $45 and I buy a call option for $25 or $45, that's an at the money call contract. It's lower risk because if the stock stays the same price, you don't lose it as much. But anywho. So opens at market basically at $45. I set some call options to automated sell, and it just went off to the moon. And then as it's approaching $46, right? What do you do when you crush it? You double down with less. So we'll take a look at what those options looked like back in Sofi. All right. So what the heck happened on the 26th, right? First, side quest. Okay. Again, I said I was going to go off the rails this week, and we did. So I had also mentioned AT&T looked like maybe there's some potential there for some options play. So once it looked as though I would be significantly up on JetQ, I did jump into a very small trade on AT&T stock. So we bought one contract for $7 that it would hit $17.50, and we bought one contract for $5 that it would hit $17.50. And that was set to expire on Friday. So a short-term contract, short money contract. I just figured, hey, we're winning. Let's take some risks that are low cost. So we're in for $6 a contract, basically 7 plus 5 divided by 2. So we're in for $6 a contract on those AT&T contracts. And then I was wrong with what I just said, but I don't want to refilm that whole thing. So when we sold the JetQ contracts, we sold 2 of them for a total credit of $40. So that was $20 each. And it wasn't $35, guys. It was $30. So we sold one contract for $30. So that's 3 contracts that cost us a total of $36. We sold them for $70. That's a solid double up. That's why we threw the money into these AT&Ts, and then we bought a share of JetQ. So we actually, as I said at the beginning of the week, I was going to try to pull some money out of these call options and throw it into buying shares of JetQ to build our position there. So that's what we did, which was a win. So we pulled $70 out. We bought a share of JetQ and then spent, $12 on call options for AT&T. We bought all of our stocks as normal. That's always about the same. Right? This is me canceling orders on things that at the pre-market open that I thought we could make more. And then I bought a bunch of calls on this is like a nightmare to follow. I bought a bunch of $46 call options. So I bought 2 for a total cost of 10. I bought 9 for a total cost of 45. I bought 1 more for a cost of 5, and then so we're in for $111 on $46 call options. And then wha-bam! I sold one of the call options for JetQ at $45. Again, we bought this for $12. I sold it for $50. So that's a massive gain. AT&T sell to close. So remember, we spent $12 on those AT&T contracts. We sold them for a total of $26. So more than a double up, which is awesome. I wish I put more money into that, but I was so engrossed in the JetQ trade that I was like, oops. But whatever. Here's another contract that we sold for JetQ for $35. So that's about a 3x. Here's one that we sold for $30. Here's one that we sold for $25. Again, these all cost us $12. We sold this for $25, $25, $25, $25, $20, $20, $20. So we made a killing on that. And then as we go through and buy our normal stocks, right? I was going to get back into the JetQ position at $45. Decided not to. I jumped into the $46 call option prior, so we were good there. And $10, we were able to sell one. So those contracts for the $46 JetQ positions, we spent $5 on all of them. So every contract was $5. I sold one off for $10, and that's a double up. So that's a win. Also, another side quest. I don't know why I did this, to be honest. I think Pinterest is like in my watch list for some reason, which I never put it there. I think I think what happened with Pinterest was I think that I got like $25 of free stock, and it was Pinterest, and that put it into my watch list. And I never really look at it because I have no desire of trading Pinterest. I don't know anything about Pinterest. So I just kind of but I never took it out for some reason. And Pinterest stock dropped like something ridiculous, like 18%, like in a minute. So I said, you know what? We're up $350 on call options. let's buy a $15 call option on Pinterest because it just dropped 18%, and that's ridiculous. Oh, and here's the news: is that they partnered with Amazon. So Pinterest partnered with Amazon, and it dropped 18%. That made no sense to me. So I bought one call option for $15 and sold it later for $30. So that was a little double up there. And that is how we crushed the market this week. All right, so here we are in Seeking Alpha, and we are taking a look at the portfolio. I have everything sorted out by total value, and leading the charge, we have an overtake here where Realty Income Corporation has surpassed SCHD. So we have $838 of Realty Income Corporation. That's 13.34 shares. Dividend is still looking great. I'm going to just zoom this out a tad because it's pretty zoomed in. So yeah, that's looking great. You know, dividend pays out every month with this one. So I think that gap might just get slightly larger throughout the course of the month. But, you know, Realty Income Corporation has been down, and we've been buying it as it's going down. Same thing with SCHD, but like Realty Income was down. So good to see it kind of bouncing back a little bit. And that's why we have passed SCHD. You know, SCHD is pretty much right there. We're at $832.46, 11.47 shares here. Dividends still looking great. You know, year-to-date performance, we're down 3.93% on SCHD. So not great there, but, you know, as is the economy. So with SCHD, and Realty Income Corporation, both of these we are putting $10 a day into instead of $5 like the majority of the other stocks, which is why they're so far ahead. Now, JEPQ, JP Morgan Nasdaq Equity Premium Income ETF, will be turning 1 year old soon. This is a new fund that a lot of people aren't familiar with, but know its older brother, which is JEPI, J-E-P-I. So as a way to kind of track this and learn it and figure out kind of how it works, I bought some of it. And now, you know, the way I look at JEPQ is if we can secure money through like options trading, or if there's like someone signs up and there's like, you know, you get $25 from Sofi or whatever, I'll put that into JEPQ. So this is kind of my monitor of how's my trading going. That's sort of what I've turned JEPQ into. So you can see that now we're over $512.37. That is not primarily due to price appreciation. That's because I bought some more. So as I showed you guys, I had bought a share of JEPQ, and I plan to do more buying of shares of JEPQ. So we're at 11.19 shares. This pays a dividend every month, so that's awesome. And guys, year to date, we're up 18%. So that's like massive, really, really good. And we're gonna pump a little more money into that too. So getting into the stocks that are $5 a day of contribution, we have Pepsi leading the charge. Pepsi really has made a pretty big run here, guys. We're at $190 per share. So that's been a massive run. I mean, if we look at this over the past like month, I mean, that's nuts. It was 179 in March when we were buying it, and now it's up 6% in 1 month. Like, that's absurd. That's completely absurd. So, yeah, great performance from Pepsi. Procter & Gamble, which is going to be right next to it, basically neck and neck, like on the same level of performance. I mean, both of these stocks side by side are performing really, really well. Their dividend yield is basically the same. It's almost like they're two interchangeable stocks that have been appreciating at the same rate for past 50 plus years. They just happen to pay out dividends on other cycling months, so you can get consistent and understandable dividend income on a monthly basis. It's almost like I did that on purpose. But yeah, so the yeah, just two great stocks side by side, paying the exact same forward dividend yield, both with the stock or with the dividend growth, at least for the past 50 years. Pepsi is outperforming Procter and Gamble a little bit, but these two have basically been neck and neck. So we have $459.56 of Pepsi and $458.37 of Procter and Gamble. JEPI. So this is JEPQ's little brother, right? A monthly dividend payer, really an income source. This is JP Morgan's Equity Premium Income ETF. It's designed to generate income. We have 7.91 shares of that. And again, at $438.35, our JEPQ position is larger than our JEPI position, which is mind-blowing to me, but that's okay. So this, again, we look forward to the dividend that will come out. Probably they usually pay like the 5th or so, like Friday probably. If not, maybe Monday. So that'll look good. BlackRock is, it's up and it's down. You know what I mean? It's all over the place. It's bouncing around. It's like that Katy Perry song. You're black, then you're white. You're wrong, then you're white. It's BlackRock. That's them. Yeah, you just saw the shoulder shimmy. We have 0.61 shares of BlackRock at $411.57. The interesting thing here is that we're about even on it, even though BlackRock is down year to date 5.28%. I think we're down like $20. It's not a massive, hit or anything. The dividend yield that we're buying right now is really good. We're paying getting 2.98% for every buck that we're contributing at this lower price. So, I'm okay with it. Really on the big loss spectrum, we have AT&T and MPW, although MPW is making a comeback. So AT&T, just to pull this chart really quick, this is like a tale of almosts. So like AT&T was doing really well. We were buying it really cheap at like $18, $18.50 around there. It spiked up to 20 and then just tanked. They had a bad earnings report, so that's not great. That's like true loss that we're gonna have to recoup over time. Their dividend yield is really good. It's at 6.28%. So we will continue to buy this every day. And it's just going to take a little while. Like this is a marathon, not a sprint. I say that all the time. We can have little sprint bursts in the marathon, like the options trading and stuff like that, and we moving stuff around. That's great. But we have 22 shares of AT&T. So when the AT&T stock price dropped by $2 in an hour, multiply that by 22, and that's how much we lost. So it is what it is. We'll recoup that in time. It's probably going to take a month, and then we should be about even on AT&T again. So that's not that huge a deal. The dividend does get paid out on the 1st, though. So yeah, Monday dividend, and that's getting paid out with the stock price being super depreciated from the bad earnings. In a weird way, it's kind of a blessing, because we're going to get that for cheaper. So that's actually pretty good. Let's look at that, actually. I haven't looked at this yet. So the dividends, when was their snapshot? Oh, it was the beginning of the month. Okay, so 28 cents a share, though. So 28 cents per share times, what do we got in here? We've got, let's say we had like 18 shares. That's probably a good guess. So 18 shares times 0.28. So we're getting like $5 or so in a dividend. So that's good. That's like an extra free day of investing. MPW. All right. So MPW is rising like a phoenix from the ashes, and we are at $378.60. We have 43 shares because we were buying it for super cheap when it was like really depressing to buy it, but we were still buying it, so that's fine. Their earnings report came out, and they were like, it's not as bad as everyone thought, so that's awesome. And then also they said that they're going to pay the same 29-cent dividend per share in July based on holdings in June, which is sweet for me. Like as far as the dividend goes, like 29 cents per share. When you're by that time, we'll have like 60 shares. We're gonna make a we're gonna at least get a free share. I mean, based on what I have right now, 43.17 shares times 0.29, that's $12.51. So as long as the price of the stock isn't 12.51, we're getting a free share MPW on dividend day. So that's awesome. But yeah, because of dollar cost averaging, like we buy this all these stocks except JEPQ every day, every Monday through Friday, and we bought at so many lows. My cost basis is under $10 now. So my average price of MPW is like $9.90. So if we make it back in like the $10 range, which we're kind of tracking that way, we'll be making money again, which is just unbelievable. But yeah, I mean, we were buying it for like $7, so we bought it so cheap for so long that now, as we creep our way back up, I mean, yeah, we just got to get to $9.90. We're at $8.82 in after hours trading. People are starting to rate it as a buy again. The valuation's an A plus. Like the momentum's no longer an F; it's a D minus, which is a big difference. That's a very, very big difference. Yeah, I think that people are very much more optimistic about MPW lately. And again, I'm clicking all over the place. I've been pretty optimistic myself, just watching it. But the earnings report that came out was good news. They made money, right? A stock that makes money after paying a huge dividend is a good place to be, especially in a REIT with crazy things going on. So that's that. And then the one last thing that we need to cover, aside from our $46 JEPQ calls, we have 11 of them, is our cash balance. Because we've sold off so many call options, our premiums that we have earned are $309.30 after buying all these call options for JEPQ at $46 and buying an additional share of JEPQ itself. So really, we made like 400 something bucks. We just aren't going to see it show up in the portfolio yet until we sell off these call options. So yeah, pretty stoked on that to see just a big cash balance in the account. I'm probably going to buy like 3 more shares of JEPQ, maybe 4, so I have an even 15 or something like that. I want to leave a lot of that cash available for options trading, so we can kind of supercharge the portfolio a little bit. And it's the thing with options trading is it's not necessarily something that I want to do all the time, but sometimes you just see the opportunity and then you want to be able to jump on it with a couple $100. Like some of the trades that I made were a little more ridiculous than what I would normally do. Like I don't track Pinterest. Like throwing money into Pinterest, probably a bad choice. Did it work? Yes. Am I glad it worked? Absolutely. Should I do it again? Definitely not. But, I don't know. I was feeling really good about it, and we were just like on an absolute crusher of a trading week, which is awesome. It was kind of funny. In the past 30 rolling days, they rank like all the traders on Sofi. So for the rolling past 30 days, I'm currently the number 1,046th most successful trader on Sofi, which is like, what? Sofi's like not a small platform, guys. Like they own arenas. So that was pretty cool. Now it's like in my head that I want to get into the top 1,000 traders in the world using Sofi. So that'd be just like the best, coolest thing. But hovering in the top like 1,000 to 2,000 is a pretty cool feat. And we're not like YOLO trading either. Like these are actual legitimate purchases of things and like reasonable call option contracts using like 5% of our portfolio's value. That's a reasonable thing to do. So now I just look forward to taking some money out of those call option premiums that we earned. We'll put that back into JEPQ, and we'll see what we can continue to do and where we can go from there. All right, so with all that said, guys, thank you again for checking out the video. I have a couple things that I do want to get into, right? So there's a couple funds that have come out that I think I'm going to do a little investigating on. They look ridiculous. They're paying dividends of like 50%, which is just insanity. So I might take a little look at those. We might make some videos on that kind of stuff. I was able to go to a Red Sox game on Friday. That was a blast. So trying to do some of that stuff, which is fun, and just, I've been really tired, so I apologize that I'm posting on Sunday. I'm trying to get this stuff out early. You hopefully have been able to see the sunrise behind me in the background. But I'm, just so tired. Yesterday, I got home from work at 7 and just went to bed. No dinner, no nothing, just went to bed. So like, been really, really tired. But we're going to keep on moving with that stuff. Try to push out some new content over the course of the week. And then, all things aside, it's been fun investing and doing all that. Finally, we have a good week of investing, and we flew a little off of the schedule, like how we normally would want to do it. But maybe you guys will end up learning something about options if you don't already do it, or it's just cool to see someone do a successful options trade, like right off, just kind of on a whim. And now our portfolio is in the positive. We are now making money, which is a really good thing because the market's not been that great. If the market's up and down and you're making money, it's a great place to be. So that feels really good, and we just got to keep our eyes open for the opportunities. Other than that, we're going on Sofi, so we're getting back into being healthy, eating healthy, and we're doing keto. One of the other guys in the office is actually doing keto as well. He just started like on Friday or whatever it was. So now I'll have somebody at my work that's also, interested in keto and focusing on that. So, having the support group will be nice. I've still been in the gym on and off, which is great. When I say on and off, I mean like not every day. But we're going to the gym pretty regularly. I'm gonna head over there in a little bit. But yeah, it's been pretty cool. So, I thank everybody, and I wish you all happiness, health, and wealth. With that, roll the outro.